Hello everyone, George Dos Santos here with the look at the market for the week ending Friday, December 27th. I don't do these videos every week anymore. I do them every 2 or 3 weeks. And sometimes I'm away, I'm traveling, so it's not convenient. In any case, before we begin to look at charts, I usually bring up this disclaimer, especially for those who are new. And the disclaimer simply lets you know I'm not a licensed professional investment advisor. In fact, I'm a psychologist and I do this for my own purposes, and I share it on a YouTube video, and those who care to look at it can do so and make use of it in any way that they desire. So here's a weekly chart of the S&P 500. This chart takes us all the way back to the beginning of the year in January. So what you can see here is that in January, the market made a bottom and then started trending up. And since then, we've had a nice uptrend. We know that the market has gained double digits, over 20% to 25% on the S&P. But in any case, what do we have now? We have, I'll just crunch the chart up so you can see more clearly. We have the moving averages, the 4 exponential moving average, above the 9 exponential moving average, which is above the 30 weighted moving average. When moving averages are positioned like this, the shorter term averages above the longer term averages, it usually indicates an uptrend. Another thing that that confirms the uptrend is way back here, back in October, the parabolic, this white dot, fell below the most recent bar then, and has remained there since. Now I'm using the parabolic with these parameters here, not the classic parameters that others use. I find it's more sensitive and I like it. So we do have the parabolic confirming the uptrend. We are noticing the 3 standard deviation Bollinger Band is somewhat far away from current price, but price is riding just below this, the 2 standard deviation Bollinger Band right here. And so at some point, this is going to level off, or we might get a retracement. But as of now, we do have a nice uptrend. You can see that below here, MACD, moving average convergence divergence histogram, is trending up above the 0 line. That's bullish. We have Williams percent R with the 30-day period continuing to remain above this magenta line, that minus 50 line, and it's been there, notice, since the beginning of the year. This is one of my favorite indicators. And if you look at this weekly chart, geez, you can see clearly. You buy when the Williams percent R with a 30 period is above the magenta line of minus 50, and you hold it. You've been in the market all year long. The other indicators down here, we get more volatility, we get more whipsaws. The formula here is applied mostly better to the daily chart than the weekly chart. We'll see that later. RSI 12 is also above the 60% line. So no need to belabor the point. We are having a nice joyful uptrend on the S&P 500. And if we happen to need any more evidence of this nice powerful uptrend, this is what is called an Ishimoku cloud chart, and you can see the Ishimoku cloud here. It's actually pointing to future increases in price. And so prices are above the cloud, very bullish. Nice bullish indications here too on volume. And quickly we look at the daily chart, and we can see that, of course, the daily chart is also trending up. We've had more fluctuations here, or volatility, or pullbacks, on the daily chart. It's a shorter term. But all in all, the daily chart is also indicating a nice uptrend, as you can see here. The moving averages are remaining above each other. MACD in bullish territory, RSI, Williams percent are above the magenta line, etc. And here we take a look at some charts from stockcharts.com. And the first one here is that spread between the new highs and new lows. And you could see that the spread is still pointing to many more new highs and lows. And as long as we continue to do that, it's a good leading indicator according to our friend Alex Elder. And I believe so. Here's another chart from stockcharts.com. This shows Alex Elder's impulse indicator. It's what he calls a censoring indicator when the bar is, and this is a weekly chart. When the bar is green, we are not allowed to go short. We should go long or hold. And you can see where we are now is we're not allowed to short the market. We should be neutral or bullish. If we look at a daily chart, let's see what we have. On the daily chart, we're getting a little bit of a pause here. A blue bar says we can go either long or short. But since a weekly chart is green, it's showing us a green bar, we really ought to defer to the weekly chart. And here's one more chart from stockcharts.com. It shows us the percentage of stocks of the S&P 100 above their 200-day moving average. And you can see that's 85%. That's pretty bullish. Some people might think it's even toppy. All right, so let's look at some other stuff. So here's a chart on best choice. Most of you are familiar with that. What this shows us is that the S&P right now, this is the S&P. Right now, the S&P is overbought by this measure anyway. It's overbought. Now, it can remain overbought for a while as it did here, but sooner or later, the market tends to correct a bit. If the market corrects going into the new year, because there are so many other indications of bullishness, I think it's prudent to assume that the correction should be temporary and not a major one, unless we have some unanticipated black swan event. So that's my thinking on this. Now, on the note of caution, in other words, we always want to know what could go wrong, so we could be cautious about it. Barron's this weekend is showing that while the Dow Jones Industrial Average is making this new high here, the transports are not making a new high. So insofar as the old Dow theory is concerned, we are not getting confirmation of this uptrend from the Dow transports, and that's a cautionary note. On the other side of the coin here, with the put-call ratio versus the S&P, we're still looking bullish. It's situated in that bullish area here, right here. So that's another cautionary note. Now, before we leave Best Choice Software, let's take a look at a stock that I have a strong interest in right now. And let me point out why. There are certain things I'm seeing here. This is a regression channel. These three yellow lines here plot a regression channel. And you can see what happens is that when this is a 6-month chart. So when these lines are close to each other, there is a minimum of volatility, as opposed to some other stocks that have a great deal of volatility. For example, Amazon, I believe, a fair amount of volatility. You can see the difference. And besides, it was trending down until very recently. Now, let me show you some other reasons why I like BMY, Bristol Myers, right here. You could see that I had a note on it some time ago, coming back to consensus of value by around 63. Well, it is now at 64 and change. What is it? 64.14. All right. So on Shaken Analytics software, we do a checklist, and this checklist tells us about the key factors: the power gauge rating, which is very bullish; relative strength, how it's performing relative to the rest of the market, strong; industry strength is strong; overbought, oversold, a little early because it's just crossing into the oversold region here. Long-term trend is up, strong, money flow is strong. So this, you can't get much better than these ratings. So I like Bristol Myers. Now look at this. Bristol Myers, you might say, well, it's already done its thing because it's up about 45–50% for the year for the past 6 months. But it's increasing its earnings, I believe, 12 cents there, 10 cents there, about the same. So I like Bristol Myers. Besides that, on all these checklists, most of these checklists, you're going to find Bristol Myers here. And these are screens that we do. And Bristol Myers is on almost every screen that I've done. Okay? And right up at the top. So I'm interested in that one. So we'll take a look at a few others that are less volatile than most of the other stocks in the market. You can see here that Lam Research, a semiconductor equipment provider, you can see that the volatility is low here as well. Take a look at another. Here's another very good example, Apple. You can see how narrow the bands are. Volatility is very low. And of course, we know that Apple has been growing significant. Price growth is 116%. So that's fantastic. The last 6 months particularly has been very, very strong. The stock is now at what, 290 or so? And if some of you will recall that I sent you a chart on Apple in 2016 when it was 93, showing two bullish divergences. I'll remember to put it in the email for you and you'll see what I mean. It was fantastic. Let's take a look at a few more. Here's another big holding of mine, which is Microsoft. It's overbought. They're both overbought, Microsoft and Apple. Not growing as fast as Apple, but over the past year anyway. But still holding it. Another one that I own quite a bit of is Target. You can see it's been growing at a rate of 147% for the last year, the annual growth rate. And I still have a lot of that. Some covered calls on it too. Here's CVS. It's one that I do not own right now, but you can see it reached an overbought region, and now it's oversold. But it's growing at a nice rate of over 100% for the per annum in the last year or so. And here's NVIDIA, another one with low volatility over the last 6 months and growing nicely. Growth rate is 119%. So as I've been trying to point out, I don't own all these stocks. I own a few of them like Target, Microsoft, Apple, etc. But I just want to show you stocks that you might put on your watch list and keep an eye on them and do some your own research on it. Now, some time ago, I met with a couple of friends who we discussed some alternatives for where we might put some cash, because many times we have a lot of cash on the sideline. And we decided, look, why not ETFs? So which ones do you buy? Well, if you go to this website here, sector, sectorspdr.com, and look for the sector tracker page, you will see this. And in fact, you can get an icon and put it on your screen. And what I've done is I've decided, look, I'll buy the top performing ETFs for the past 6 months. And you can see the ones here would be XLK, then XLF, that's 17 and 13%. XLV, almost 12%, 11.5%. XLC is another one that comes in pretty good. And so once a month, I'll take a look. And if there's another one that I should replace one of those that's there with, I'll do that. So that's something that those who don't have the time, don't care to do the research, but they need to know to get a little better return, a lot better return on cash. I would say something like that makes sense. Let me know what you think. And here's how those ETFs are currently rated by Shaken Analytics. You can see XLC, XLK, XLV, XLF. This is the regular spider. And, you make a choice. So that's some of the ways that I'm approaching using the ETFs now. One basket of ETFs that I have. And one last thing before we go, we have only 15 minutes on this video. I have a list here of stocks that meet these criteria for green on the screen, as I would say. And so you can just make a note of these and do your own research and check them out. See if any of them meet your criteria for a stock you might like to invest in or trade. Notice BMY is right at the top. Folks, Happy New Year and safe driving, etc. And wishing you all the best for the new year. Bye-bye.